Hey, it's Rob Weinberg, and on this channel, we empower people to take control of their futures through expert mortgage, financial, and real estate strategies. If it's your first time watching, hit that subscribe button, and don't forget to get notified on all of our future content. In our lesson today, we're going to be talking about mortgage myths in 2023. We've done other shows about mortgage myths in the past, but there's so many myths going on right now. I wanted to do an entire whiteboard episode all about the top mortgage myths going on right now in 2023. First thing we're going to talk about is the biggest myth that I'm seeing right now. And the biggest myth of 2023 when it comes to mortgages is people think that you need a perfect credit score in order to get a mortgage or buy a home. And that couldn't be further from the truth. You know, perfect credit score, what does that mean? For some people, that means 680. For some people, that means 780. Others, it means over 800. Everyone's got a different context when it comes to perfect credit. But what I'll tell you is, regardless of what you think, there are mortgage programs, generally you can get down to a 620 credit score without any issue on. And there are government-backed loans that'll go down to a 580 credit score, some that'll go even lower. But generally, the low end of the credit score range to get a mortgage right now is between 580 and 620. So there is hope for you if you have a credit score in the high 500s or low 600s. You just have to deal with a lender or broker that knows the programs and has the different options. There's only certain banks that do them, and you need to know which ones those are through your advisor. DP, what that stands for is down payment. Hearing a huge misnomer out there, misconception about down payments when it comes to buying a home in 2023. A lot of people still today think you need 20% down or more to buy a home, and that is absolutely not true. There are many low down programs that'll go as low as 3.5% down, and there's also no money down loans through USDA and the VA, which require no down payment. Now, no down payment doesn't mean you don't need any money. It just means you don't need any money down, right? So there's other closing costs and things we'll talk about. But that down payment myth stops so many people from buying a home. So you can do the math. Look at your average home that you're looking at in your area, 3 to 5% on the low end of that. Again, most programs can get 3%, and on some of the government ones, especially if you're a veteran or buying in a rural area, 0 down, you just have to have the money for the closing costs. So that down payment myth has been absolutely busted here today. Misconceptions around buying a home when you've got a lot of debt. Again, what's the context of a lot? Some people 10,000 is a lot, other people 100,000 is a lot. So think about your scenario. If you think you have a lot of debt, is that stopping you from applying for a mortgage, trying to get pre-approved, or moving forward with the process of buying a home? Don't let it stop you. The reason this is so opportune right now is because the administration there in Washington has just restarted all these student loan payments. So you might have not been making a student loan payment for years, and all of a sudden now you're having to make that payment again. How's that going to be looked at when you buy a home? How's that going to affect your budget when it comes to saving towards your home and future investments? You can do it, just again, know the programs. So here's what we're talking about is how are the student loan payments calculated? Each loan is going to have a different calculation, and the calculations can definitely work in your favor or they can work against you. So talk to your mortgage advisor about income-based repayment, deferment, and some other options that might help you get that mortgage a little bit easier. But we don't want to only stop at student loans. We're also going to talk about credit card debt because a lot of people right now are drowning in credit card debt. I just heard we hit an all-time high in credit card debt in the US, and that's because this inflation's going up. People are having to put a lot of expenses on their credit cards in order to make ends meet. So with credit cards, the good news is that the mortgage company is only going to give credit, or I should say, give you an actual qualification based on the minimum payment on your credit card. So you might have a $5,000 card and the payment's only $100, but maybe you pay $500 a month. They're only going to hit you for the minimum payment, which is the $100. So generally speaking, credit cards are the most favorable of any debt when it comes to getting a mortgage because that minimum payment is so darn low, it can actually work in your favor. So the moral of this myth is don't prejudge yourself. Get with an advisor that has a great context of different loans, different banks, different programs, and they can fit you in the right box. I'll just tell you, I've had people with hundreds of thousands of dollars in student loan and other debt be able to buy a home just using the right program and knowing which box that they fit in. Another major myth that we're seeing in this economy right now in 2023 is the buy versus rent myth. You know, for years, it actually was cheaper, especially here in Connecticut and in the Northeast, it was cheaper to buy a home than it was to rent. for many, many, many years. Recently though, like in the last 24 months, the prices obviously skyrocketed, the interest rates skyrocketed, and you know what? Now it doesn't make as much sense to buy a home versus rent. Specifically from a financial standpoint, the monthly payment. You don't have to be a rocket scientist or a mathematician to look at what the rent would be on a property versus what the mortgage would be on a property. And right now with the current economic environment, almost in all cases, the mortgage is going to be quite a bit higher than what it would cost to rent a home, especially if you're putting little to no money down on that property. So what you want to understand here is what are the benefits of buying versus what are the negatives to renting, right? When you're making a mortgage payment every month, some of that money is going towards principal, which is a forced savings account in the equity of your home. When you're giving that rent payment every month, yeah, it might be a few hundred less, but it's 100% interest. None of the money is going to your benefit. None of the money is going to principal. So when you look at it from that context, if the mortgage is going to be a few hundred more, but you're actually gaining a few hundred a month in equity, then you actually come out ahead by having the mortgage versus the rent, even though the rent is lower. So you want to really look at where you're at as a chapter in your life. You know, home buying generally, unless you're an investor, it's going to be to plant roots, right? It's going to be where you want to stay somewhere for a long period of time. I tell my clients minimum 5 to 7 years generally that you want to at least plan to stay in that home. That's what makes the investment of a home worthwhile. So if you're at the stage in your life where you're a student, you're just starting your career, you don't know where you're going to be in 2, 3, 5 years, don't buy a home. Just keep renting and figure out where you want to plant roots. Don't feel rushed. Buying a home is not supposed to be emotional. It's supposed to be more logical and make sense. So step back and give yourself a real consideration of the chapter you're at. On the flip side, if you're having kids, if you're married or getting married and you're moving into that stabilization period in your life, then regardless of what's going on with rates or prices, you should probably look at planting roots and look at the investment of owning a home as a long-term investment and building wealth for your family over a very long period of time. And when you do that, I think you'll find in a lot of cases, the little bit higher cost you're gonna have by owning versus renting is worth it for all those financial reasons. Another thing to consider is that real estate investment opportunities come up all the time. And if you're gonna sit there and rent and not save money, then you're not gonna be in position if a great investment came along, right? A great investment opportunity. You might say, I'm not interested in buying a home, but what if a great deal came across your desk that you could walk in with 20, 30, 50,000 in equity? Would you be able to come up with a down payment in that case? Would you be able to get the pre-approval to move forward in that case? So you don't only want to look at that chapter that you're in and are you going to live there, but what about an investment? What about buying a rental property? Are you set up to do that if the right deal came along? And if you're not, you might want to reconsider that. A lot of first-time investors have been considering buying an investment property before they actually buy their first home because, again, it's all about opportunity and being well-positioned, okay? So the last myth that we're going to talk about is the myth and misconception around closing costs. So when you're buying a home, no matter where you're buying it, there are other charges and fees besides the down payment that you're going to want to be aware of, and these are called closing costs. Now, closing costs are sectioned out into different types of closing costs. You've got origination and lender fees, you've got title and attorney's fees, and you've got prepaid items. Prepaid items are going to be like your property taxes, insurance, and things of that nature that need to be put on deposit with the lender when you're buying your home for your escrow. So these can add up to quite a bit. Generally, I tell my clients, you want to have anywhere between 3 and 5% of the price of the home, in addition to your down payment, available towards these closing costs. If you can get the seller to pay these or a portion of these, that's great. But in the seller's market that we're in, we're not really seeing as much of the seller paid closing costs. So you need and you want to be ready to handle these costs on your own, in addition, again, to whatever down payment that you're putting. So there's a myth out there that you can always roll these into the price of the home. Absolutely false. You cannot always roll them into the price of the home. In order to roll them into the price of the home must appraise for higher than the initial purchase price at least, and you're gonna need to raise the purchase price and then have the seller credit that money back to you as a closing cost credit, or just negotiate it up front that you're gonna buy the house for more than whatever they're offering it, and they'll credit that extra amount back to you as a closing cost credit. again, you gotta begin with the end in mind. You gotta negotiate that up front, ideally, to make it happen. That's the only way to roll closing costs into a purchase when you're buying a home. Refinancing, different story for another video, but that's how it works for home purchases with closing costs. The last thing to say on that is points. You know, people say don't pay points. Well, I'll tell you, as a mortgage broker, I look at hundreds of lenders, and there's sometimes not one lender that'll do a loan without paying at least a half a point to a point, especially right now with the environment we're in. So you're not getting gouged. It's not a bad deal. A lot of times you will have to pay a fraction of a point or a point or so to get a loan, and that can add to those closing costs. 1 point is equal to 1% of the loan amount. So talk to your mortgage advisor about this, and they can guide you through the points, how it works, and if it applies to your situation. So I hope that this has given you a real good handle on the myths going on and the misconceptions in 2023. If you found value in today's lesson, go ahead and share this with someone else who's looking at buying or refinancing a home soon. And if you're looking for advice, or maybe someone you know is looking for advice on your personal mortgage situation, reach out to me by call, text, or private message. I do offer one-on-one customized solutions and consultations for my viewers. You can reach me directly at 860-413-3938. As always, I hope that helps, and we'll see you next time. Take care.